Matic with the Investing News Network. Here with me today is Cory Fleck, host of the KE Report. Cory, thank you for joining me.
Thanks for having me, Teresa.
So yesterday you hosted a panel entitled Why Oil and Gas? What are your thoughts on oil and gas? Are you bullish, bearish?
I think we're seeing a bottom in oil, but, I think that's obvious by how much it's dropped, about 70% in a year and a half. But I don't think necessarily that we're going to see a screaming higher oil price. Just if you look at the fundamentals, quite frankly, we are in an oversupply environment right now. We are seeing demand increase, but supply, especially with Iran coming back on and OPEC countries not willing to cut really any supply yet, we are still going to see some pressure on oil. That being said, I'm not looking for oil to drop below the $20 level. I think we might have one more lower low to put in here, but I think that then it will be more of a grind back up as we see some equilibrium in companies either cutting down production and people just taking advantage of a lower oil price, which helps a lot of industries.
Of course. And what other positive catalysts can investors be looking for when it comes to the oil price?
I think people can always look at big black swan events. I personally don't like investing in those. I find that is really chasing something that is impossible to predict. But just general, either companies going out of business, especially in the US, fracking companies, and an announcement out of OPEC. Any sort of supply decreases is going to be good for oil. And right now, we haven't seen that yet, but some of the OPEC countries are struggling at these prices, and they need to keep it going, and that entails cutting some supply.
Sure. And on the company side of things, of course, like the junior resource sector, junior oil and gas companies are really struggling. What are some of the ones that you think are weathering the storm the best?
Any companies out there that have been able to cut down costs, obviously that's what everybody says, but still work at in advancing some of their wells. If they do have some wells online that are producing, and if they have some cash flow in there, that's the name of the game right now. It's diving into the balance sheets, diving into the production, and seeing these companies that are still making money at these depreciated prices while still being able to grow the company. It doesn't need to be fast growth, but it needs to be the ability to keep the ball rolling with their company rather than fully shutting down or producing these wells at losses. That doesn't help.
Of course. And on the subject of fully shutting down, that's something that's come up a little bit in the mining sector. People are wondering what the future is going to look like for Glencore and Freeport. What about the oil and gas sector? Is there a risk of failure there? Or are these companies going to bounce back?
I think there's always a risk of failure. There are some companies that are pretty heavily in debt, and my background is as an accountant, an analyst in that aspect. I love diving into these financials right now, and you can see some glaring issues with some of the debt levels that these companies are holding, simply because when these debts do come due, there is the chance that they will be able to roll them over and keep this advancing. But some covenants, if they get offside on, especially in some of the fracking companies in the US, we've even had to see them write down some reserves due to accounting procedures that they need to go through. And if we continue to see this, then balance sheets will be offside, and banks do have the option of calling some of these debts. I don't think we're going to see a waterfall decline and that's going to be the end of fracking altogether. But we already have seen a couple companies take massive write-downs and a couple companies that are closing up shop. And that's going to be a continuous process as we work through this year, as we find the bottom in oil. And as oil starts to move up, some of these companies, even at $30, $40 oil, can't make money.
Wow. And which companies do you see that are still in good shape?
There are some, I don't like to give specific names because we save that for some of our subscribers, but there are some that are based outside of the US I quite like, actually outside of North America, that we like, that are able to continue to produce at levels that are very reasonable and make money, which is really the bottom line. It's all about diving into their production numbers and seeing this cash flow generated from their production.
Okay. Thank you for joining me, Cory.
Thank you.
I'm Teresa Matic with the Investing News Network.